If you've noticed the news lately, mortgage rates have been hitting the headlines again, with it being at a 22-year high. In this video, we'll dive into why mortgage rates are so high and how it's impacting those who are thinking about purchasing property in the near future. Make sure you stay to the end because I'll provide some tips on how you can get a lower rate mortgage if you are thinking about buying. Hi, welcome back to my channel. My name is Jade Lee-Duffy, your favorite San Diego realtor. Here I discuss all things related to real estate and what it's like to live in San Diego. And if you have any questions on the different neighborhoods in San Diego or any real estate related question, please feel free to call or text me. My number is in the description below. And can you do me a favor? If you find any value in this video, please hit the like button, also subscribe, and hit the notification bell so you are notified the next time a new video comes out. Okay, let's dive in to mortgage rates and how they have been at a 22-year high. On CNBC, they write, mortgage rates have hit their highest point since 2000. And in CNN, they write, U.S. mortgage rates soar to 7.23%, a 22-year high. It goes on to say that U.S. mortgage rates surged again this week, rising to their highest level since 2001. And then it keeps going. The 30-year fixed rate mortgage averaged 7.23% in the week ending August 24th, up from 7.09% the week before, according to data from Freddie Mac released last Thursday. A year ago, the 30-year fixed rate was 5.55%. And then one last bit, it continues, indications of ongoing economic strength will likely keep mortgage rates where they are or send them higher in the short term, says Sam Cater, Freddie Mac's chief economist. And one last article, and in the New York Times, they write, why are mortgage rates so high? How long will they stay up? The article continues, with rates at a 22-year high, home affordability is at its lowest level in several decades. And home prices have held strong since the inventory of existing homes has dramatically decreased. There are 30 to 40% less homes for sale on the market than there was pre-pandemic. And while in San Diego, there are 45% less homes on the market than there was in 2019. This is because homeowners who have locked in lower rates in the last few years are very reluctant to sell. As recently in January 2021, the average 30-year rate dipped to 2.65%. Now it's almost triple that. So the combination of low inventory and high costs have squeezed home buyers and sent overall number of home sales way down. So why have mortgage rates climbed so high? Economists say loan rates have been affected by a complicated combination of three factors. Number one is the economy. The economy in the US has been very strong and it has been steadily growing. And when the economy is strong, interest rates follow. And interest rates tend to rise as well. Number two is inflation. Inflation is another factor that contributes to the high interest rates. When inflation rises, lenders increase their interest rates for the decrease in purchasing power of the money they lend. The Consumer Price Index is a leading indicator of inflation, and it rose from 3.2% in July from 3% in June. And this is the first time the Consumer Price Index ticked up in more than a year. And number three on the list on why mortgage rates are so high, the Federal Reserve policy. The Federal Reserve plays a significant role in mortgage rates. The Fed has been gradually raising its benchmark interest rates to control inflation and prevent the economy from overheating. These rate hikes have a ripple effect on mortgage interest rates. How do mortgage interest rates affect the real estate market? The first thing is decreased affordability. You get less for your money. Higher mortgage interest rates make homes less affordable. And as rates increase, monthly mortgage rates increase as well, making it more challenging for buyers to qualify for loans and afford their desired home. According to a Redfin article, a home buyer on a $3,000 budget has lost $71,000 in purchasing power since last year as mortgage rates hit 20-year high. Here is a good graph that shows the affordability and how mortgage rates have affected that. So as mortgage rates go up, then affordability goes down. The second thing on how mortgage rates affect the real estate market is slower market activity. With decreased affordability, the high interest rates have led to a slowdown in mortgage demand, as potential buyers are put off by the high cost of borrowing. So this has resulted in fewer transactions taking place. Last week, there were 29% less mortgages filed than the same week a year ago, according to Mortgage Bankers Association. And lastly, higher rates affect buyer behavior. Buyers will adjust their preferences, so they might have to go for a smaller home or choose a different location that is slightly less expensive than their desired location. Or they might have to put their plans on hold altogether until mortgage rates go down. So thank you for staying till the end and finding out what's happening in today's real estate news. Since you've stayed here to the end, I've got some bonus tips. So if you are thinking about buying, there are a couple tips that will help you get a lower mortgage rate. Tip number one is monitor the rates. Stay informed with the current mortgage rates and trends. Regularly check with lenders and mortgage providers to understand the rates and options available to you. Actually, last year I helped out a couple. They were buying their first home, and mortgage rates were slowly going up and up around the mid 5.5% area. And we were staying on top of the rates, and they actually dipped down in July just a little bit. So we were able to lock in a lower rate around 5%. So it always pays to stay on top of what the mortgage rates are doing right now. Tip number two is improve your credit score. This can make a big difference. Borrowers with high credit scores can score lower mortgage rates. Find out what your credit score is and work to improve it. Pay bills on time, reduce your debt, and avoid any new credit card applications or big purchases before applying for a mortgage. And tip number three is put a larger down payment. If you're in a financial situation where this is an option to make a larger down payment, this can potentially lead to a lower mortgage rate. Lenders may offer more favorable borrowing terms who can provide a substantial down payment. So there you have it, the market update for August and what's happening in real estate news and how this can affect you as a buyer or seller. Thank you again, and if there's anything I can do to help, please reach out. My number is at the top of the screen, and also hit the like button and subscribe. Thank you for watching.